Hey guys, what's going on? I had a request to take another look at Near protocol, so I'll just do that quickly. I'm on the weekly time frame. Ticker for this is NEAR. And the last time I did a chart analysis of this coin was about 10 days ago. And at the time, I think we were right around here, right? And in that video, I basically pointed out this downsloping level of resistance and said that, this level is going to be important to break and don't get too excited until this level breaks. I also mentioned that we were potentially putting in a double bottom reversal. Well, now if we reverse here, it's going to be a triple bottom, right? And the reason why I pointed that out is because we were showing a bullish divergence. So you see we had the low here, then we put in a lower low on the price, but actually I'll change the chart and show you the other one here. Yeah, we were showing, basically this is a bullish divergence. If you're not familiar with it, the price makes a low, then a lower low, and the oscillators make a low, then a higher low. And that was showing on both of this. The stochastic indicator was showing that divergence, and so was this divergence indicator that I have. And now we've put in a lower low on the price, as you can see right here. The Bitcoin crash basically brought this down. The price did a lower low in relation to these previous lows. So now we have low, lower low, lower low. But on the oscillator, on this one particularly, this was a higher low, right? And this is still in line with this trend line, right? So I would like to see this the price turn up and this oscillator kind of follow it. Now I'm going to change the chart back and give you some levels if you want to trade this. I mentioned all these levels in the last video, but in case you haven't seen it, right here, this horizontal line, this is where I would put it right above these candle bodies right here. And there's a lot of price history at this level. As you look back, you see it was resistance right here, support right here. So just carrying that across. Obviously, if the price breaks this down sloping level of resistance, this is going to be a significant level, and that's around $2.61. Now this level down here, this is the 786 retracement level. So I'll just switch this back. Take the Fibonacci, run it from the bottom up to the top, and that'll give you these retracement levels. And here's the 786, and yeah, this lines up here. But we recently, right now, the price is below it. But what matters to me is where the body of the candle closes. So here, I'll zoom in here. As you can see, in the last week, the price came all the way down here with the dump, but before the candle closed on Sunday evening, the buyer stepped in and defended this candle body. So the candle body closed just above the 786 retracement level. We're a little bit below it now, but where we are right now, you can take a trend line and you can connect the lows, right? So connect this to this and drag it out, and that's exactly where we are right now. We're sitting right on support. Okay, so significant levels here is this basically this trend line that I just pointed out. You don't want to see a candle body close below that, but the first sign of weakness would be this candle body closing below this 786 retracement level, which is around $1.15. Okay, so make sure this level holds on Sunday evening. If the candle were to close like this, you're still okay because you still have this support. If this goes, if the candle body closed down here, for example, then I would go to a smaller time frame and I would personally look to short, okay? So right now we are at a support level. I wouldn't recommend shorting support, right? The move in this case is actually to long, even though it looks pretty bearish, but we are putting in a bullish divergence. And, if you go to a shorter time frame, here, I'll do it on a 4-hour. Let's take a look. I mean, right here, yeah, I wouldn't want to take a short here. We're on support, right? So what I would do if I was to take this trade, which I'm not going to, I would enter a long, and I would place my stop loss just below this kind of swing low right here in this support line, and then I would be quite conservative with my target. So if okay, let's just see. If I targeted right here, this would give me a risk-reward ratio of 1 to 2.42, which is good. It's an adequate risk-reward ratio. It's worth taking. You would risk 2.91% to potentially get about 7% to the upside. That's pretty good. Now, if the price came here, this first potential resistance level, obviously, actually right here is going to be the first one. So that would give you a risk-reward ratio of 1 to 1.45. It's okay. You can get 4.23% to the upside, and you'd risk, just under 3%. Then the level is going to be the one I just mentioned. And then from there, the next level is going to be this one right here, which will give you a risk-reward ratio of almost 1 to 4. And then ultimately up here, you know what? Right here is where I would do it. 16% to the upside. Again, I'm risking under 3%. And then if you followed it up all the way to the top of this range, that would be huge. That would be almost a 1 to 10 risk-reward ratio. Now, the way I would do this is, if, for example, I got in here and the price came up and broke this level, I would just move my stop loss up to break even, right? If the price came back, I get stopped out, but I don't lose any money. So once I move my stop to break even, I'm in a free trade, right? As the price continues to go up, I just follow it up with my stop loss, right? And then, if the price comes back down, I get stopped out in profit, no big deal. But if the price runs all the way up here, then I can get that massive, almost 30% move to the upside, having only risk under 3%. The exchange that I use makes doing that very easy, right? So here, I'll just take a line here and say, for example, here you have like a stop loss. This will be like your stop loss. The exchange that I use, I just click and drag it, and I just follow it up like that, right? Super, super easy. It's so much easier than having to punch in the numbers manually. And the link to that exchange that I use is in both the pinned comment and the description. It has a lot of other benefits as well. It has a really great trading interface, like I just mentioned. It has a lot of coins. But the best thing is they don't ask you to submit personal information. There's no KYC process as of right now anyway. So yeah, that's really why I like it. And you may need a VPN if you want to use it. So I'm also going to put a link to a promotion on a VPN in the pinned comment and the description as well. Okay, so back to NEAR and the levels that I want to point out to you. So those are the two levels that I just mentioned. You have this Fibonacci level, the 786 down here. Then you have this level here, which would be my primary target if we're able to break this downsloping level of resistance. Obviously, draw this on your chart as well, right? And that level is $2.62. We break that. The next range I have here is $3.26 up to $3.46. So just this kind of like this range right here. And then beyond that, the next level, based on the price action here, is $4.90, and then after that, it's $6.87. So these are the targets to the upside, but there's no need to really be concerned with these higher levels until this downsloping level of resistance breaks, right? So now you're at a situation here where you have clear levels defined, right? So you have this trend line connect the bottoms, right, which is what we're sitting on. You have this horizontal level of support or resistance, pending where the price is in relation to it, and that's the 786 retracement level from the bottom part of the move all the way up to the top. And again, what I'm looking for is I don't want to see candle body close below this horizontal line, and especially not below this trend line that I just drew, right? I already mentioned that. As you can see, when this candle body closed, the buyer stepped in and defended the level. So the traders are aware of this level. What you want to see is this candle body close above it, and that would even give you a stronger cue to go long and maybe target this upper region. And if not the upper region, the more conservative targets I just mentioned in the trade example that I gave you. Now, to reiterate, the other positive is that we are putting in the bullish divergence, right? So we have a potential triple bottom here, low, lower, low, lower, low, and then we have the higher lows on the oscillator, a very good sign. But yeah, that's what I'm looking at on NEAR protocol. This level is key. I wouldn't get too bullish until this broke. This is the lower level of significance that you really want to hold. If this lower level breaks, then what I would personally do, most likely, is if we start closing a daily and weekly candles below this level, then I will look to this level as a resistance, right? Because it's going to flip from support to resistance. And then maybe what I would do is look to enter shorts, and I would put my stop loss just above here as a backstop. But until that happens, we are sitting at a support level showing multiple bullish divergences. And my trade preference would be to the upside with a tight stop loss below the levels that I already mentioned. Anyway, hopefully that helps. If you're watching this and you're not subscribed and you want to get notified when I release new TA videos, I'm doing about 2 or 3 charts every single day. Just click subscribe. But if you actually want to get the notification, you got to click the bell and then click on all. And once again, I'll put a link to the exchange that I use in both the pinned comment and the description. I think it's really good. There's not many exchanges out there right now that will allow you to trade on them without submitting, your IDs and all that stuff. So yeah, it's definitely a win. Okay, guys, hopefully that helped. Take care. Have a good evening. Bye.